Welcome back to Big Picture Investing. I'm Kevin McCormick, and this update is very important for anyone out there that has been long gold and silver or who's thinking that they missed this rally and wants to jump in now. Long story short, this rally looks like it's over. Let's take a look at the charts and figure out why you don't want to get caught holding on to this upcoming decline. All right, let's start off with a recap of where we were just 4 months ago and where we are today when it comes to gold. I'm taking a look at the futures contract in gold. That's what I will be looking at on all the charts today. And if you look back here, just at the beginning of April, we started this period of consolidation for about 4 months that ended on August 26th. That's when the current breakout we have in place started. And I want you to keep that in mind because you're going to see this as an important reference point on multiple charts we take a look at. If you look back then, we had the Williams percent R trend of momentum started to turn down, but then started to turn back up again. Where are we right now? We have started moving lower again in the trend of momentum. And most importantly, this blow off that we had this week is very significant. If you're not a futures trader out there, you probably don't understand the amount of money that is in a single futures contract of gold. To put it in perspective for you out there, a $100 move in the price of gold is $10,000 per contract. So this big decline that we had this week, this was a 300.1 day decline. That's $30,000 per contract. That's why you had this big move that occurred lower. You had a lot of people that had stops maybe at the past day's low, 2-day low, 3-day trailing stops. All those stops were taken out. But then you'll see we kind of held. I use an 18-day moving average on here. You guys can go out there. You know about the different moving averages different people use. But it held that line. That's very important right now because I believe the big money hedge funds out there are trying to make sure we stay above the important next technical levels and moving averages so they can liquidate their positions to somebody else. In their minds, they're hoping it's you, the retail trader. But hopefully, after watching this, you'll know to stay away and not be the person that they're selling their gold to. Unfortunately, when it comes to commitments to trader report, which is what I really like to use, this has not been updated for 5 weeks because of the government shutdown. But I do want to highlight here, once again, I'm using a look back on this chart, and you can see that the commercials, which are usually the producers of gold, they're always short because they're selling their gold to the market and locking in profits. They were getting long back here at these levels in May and April. Very unusual for the commercials to be net buyers or increasing their long positions or closing short positions when gold is trading at all times high. This is a statement that can be applied to most of the commodities, but that's why they usually are someone who forms a bottom that then leads to the next leg higher, which we saw here as well. And of course, at the same time, the hedge funds were at one of their lowest positions in the last 26 weeks, up until, as we mentioned before, the end of August when this started to reverse. And that's when the big money hedge funds came in and started aggressively buying gold and silver. Today, I'm going to be focused on the gold chart, but basically all the indicators are identical when we talk about silver as well. When we talk about valuation, you also see this flip that occurred right there with the end of August. Gold became undervalued against the US dollar and bonds at the end of August. This is very important because actually what I think we're about to see happen is a flip in this trend, and bonds are actually going to be gaining in value and gold is going to be going down over the next 3 months. But since we don't have what I find to be a very important indicator, which is the commitments to trader report, so we know exactly what the hedge funds are doing out there, I like to use Larry Williams's Pro-Go indicator. This here you see is the Pro-Go on a daily chart. The green line is professional buying. And once again, you see at the end of August, who came in and started becoming the big buyer? The professionals. They came in heavy, started pushing gold up, and took a little pause in September. But then when the rally continued, they came back in heavily and went to levels that really haven't been seen in years on a daily basis. But what happened just before this big decline started to happen? You can see the pros knew the top was in. They wanted to start locking in profits. They started selling even up in these levels. And then this week, there weren't enough buyers to handle the amount of selling they need to do to liquidate their positions. And the market pushed lower, and we're back into this small consolidation area again. I want to switch this over to a weekly time frame to really put in perspective how much buying the professionals have been doing in this market. I have to reduce this down because this level has never been this high on a weekly basis on the Pro-Go. We usually do not cross 40 in the Pro-Go, and we hit 60 the week before this decline occurred. This is a massive amount of hedge fund buying in gold. And the last piece I want to hit on here before I switch over to the DeMark indicators is the ADX. I have a video on my channel about how I like to use this, but long story short, when we get above 60 in the ADX on a weekly basis, the top is typically in. And what happened this week? We actually did get above 60, but the pullback that occurred this week ended up pulling us back down below 60. But you can see here, we are at a level where we would expect the market to reverse in gold. These aren't the only indicators that are lining up. Next, we're going to take a look at the DeMark combo indicator and the signs of buying exhaustion that it is flashing as well. Jump into the DeMark indicators. For all of you that just recently joined my channel from my podcast on words of wisdom, you'll probably remember me highlighting that there's often a tell when it comes to the commodity markets when the media and guests start coming on and pushing commodity positions heavily. It's a major red flag to me, and I have seen that heavily over the last 2 weeks when it comes to gold. Guests have come on claiming gold is going to 5,000 in the next 6 months. Even someone came on and said 6,000 in the next 12 to 24 months. And I've also heard ridiculous things like gold should be 25% of your portfolio. In my opinion, these are all money managers with huge positions in gold that want to lock in profits, and they know they need someone to sell to. Don't let you become the person that they are selling their positions to as this top forms. As we jump into the DeMark indicators, I'm taking a look at the combo indicator. It's a great indicator for buying and selling exhaustion that is heavily used by professional traders. And just this week, we got the 13 sell signal in gold, and then the next day, we had our huge decline. The interesting piece with gold on a daily basis is we've had a early 13 setup for actually the last couple of years when it comes to gold on a daily basis. And we had that on the charts again this time. Back in September, when you just saw on the Pro-Go, when the pros started to slow down their buying, as you can see here in the chart, we did get that 13, but this 13 was just an indicator that the trend had paused and was about to start again. We saw this same setup multiple times over the last few years. First 13, second 13 was the decline. First 13, second 13 was the decline. So in my opinion, I think we're setting up for that same pattern. But what's different this time is we have the weekly chart and monthly chart confirming buying exhaustion. So on a weekly chart, we had the 9 sell setup that hit the week before, indicating that we should have a pullback in gold. Keep in mind here, folks, this still hasn't even confirmed this pullback. We need to get down to the 3,800 level for this to be confirmed as a sell signal. And then on a monthly chart, this is the big tell. For anyone out there who is not familiar with commodities, they usually have these spike higher and then drastic moves lower as the people who really don't want the commodity have to sell their contracts. That's the position I think we are in right now. This is an unbelievable spike in the price of gold, and we have a combo 13 on a monthly basis right there saying that this month will be the top in gold. When we get indicators like this, and for me, I'm a big believer in them lining up. We don't get this very often where we have daily, weekly, and monthly alignment. But also, if we just go back in history, we do not get 13 selling or buying exhaustion very often. But when we do, it's usually a very good indicator that the top is in. And you can see this back in 2006. Same thing. Look at that peak. It's hard to see it on the longer term chart, but it looks very similar to what we're staring at right now on our chart. And this indicated the peak in gold back here. And what happened after that? We had basically a year plus of consolidation in the gold market before gold started to pick up. And then in 2008, we had, of course, the financial crisis, which really caused the next leg higher in gold. So with this said, there's a lot of data out there in the charts. There's also other great analysis that was done by Carly Garner that was on Mad Money this week. If you want to go take a look at that and see the indicators that she uses. But the big thing to say out there, folks, is basically every technical indicator you want to look at is showing that you should have extreme caution in the gold market right now. If you're not involved, I don't recommend getting in it. I won't be trading this market because I expect it to be extremely volatile. And as I mentioned before, these contracts as a future trader have a lot of money in them, and you can get yourself cleaned out in a matter of days if you are not handling your risk profile correctly right now in the futures market. So with that in mind, if you're long gold now, might be a good time to trim. If you aren't involved in the gold and silver market, stay away and look for another opportunity. Good luck with your trading, and I'll see you next time.